Hi there everyone, you're tuned into Markets Tomorrow right here on ET Now. I'm Avandavas.
And I'm Ajay Sharma. Let's get you who are the voices which will be joining us on the show today. Manishi Ray Chaudhary, MD and Head of Research at BNP Paribas Securities. Sudeep Bandyopadhyay, MD and CEO at Destimony Securities. And Sandeep Wagle, founder MD of Aptar Technical Advisory, would be joining us on the show today.
Manishi, I'm going to start off with you with the overall view on the oil and gas basket. Now, we've had this news with respect to the 45 paise hikes. They keep continuing, but do you think the market has now discounted this kind of a news? Because the stocks did react today in today's session, but on a net basis, would you be positive given that this is the third hike that we've seen?
Yeah, I think it is time to be slightly more positive on the OMCs because I don't know whether this is a, kind of a sea change, in a sense that if it's moving away from the regulatory regime that we had seen for the oil marketing companies to a more free pricing kind of regime. It may be too early to conclude that, but at least the signals are positive. This is the third hike, and it is now turning out to be a regular routine hike in diesel prices. If this continues until the under-recoveries are completely wiped off, that would be a massive positive for the oil marketing companies as far as their bottom lines are concerned. And then the important point is that even the valuation metrics, how we value these companies, those things would have to change. So prima facie, this is clearly a positive news for the OMCs. And I think the correction that they had suffered over the last few trading sessions would possibly be reversed now.
Sudeep, how would you really look at the markets right now? They seem to be becoming even more fragile with each passing day and staring into the uncertainty as far as political quarters are concerned. We've seen what DMK's pulling out did to the market, even if it's for a single day. Today's second half was also, the damage was attributed to political rhetoric from Samajwadi Party. Do you think this is how we will approach the next couple of months?
Very clearly what's happening is global headwinds and global tailwinds are, contributing to the rise and fall of Indian markets to an extent. But that's getting now increasingly overshadowed by domestic political uncertainties and domestic factors. Indian markets, we believe, cannot move up only on domestic buying or domestic selling, move up or down. Very clearly, it needs global investors to buy or sell in the market to get a very clear trend. However, what's happening very clearly is the domestic political uncertainty, domestic economic uncertainty is definitely clouding the views of the investors and having a significant impact on the market. And that's becoming more and more accentuated as we near the term of the UPA. Very clearly, UPA has about 1 year to go, and these kind of political instability, political maneuverings are expected to increase in frequency only over the next 6 to 8 months' time. And we are not looking at a very stable market in these 6 to 8 months. We will have volatile market. We will have these kind of political uncertainties. And we won't be surprised if suddenly an election is called. So we have to be prepared for that. Indian markets, I think, are factoring in those issues and getting ready for that. So a level of around 5,500, 5,600 is probably a level where the market will settle even if an election is called, unless there is a major global headwind.
5,500 to 5,600, and Sandeep clearly maintaining that volatility is the call of the day. Sandeep, we've really broken some psychological levels on the downside, below the 200 daily moving average, didn't even manage to keep our head above the 5650 level. Where is the bottom in this market?
Well, I would more or less agree with what level Sudeep has mentioned. I have a level of 5550, which is another possibly 70-80 points away, and maybe 50 points lower than that, which comes to around 5500. So take away 40-50 points here and that. 5500 broadly should see the bottoming out of the Nifty. And it may consolidate between 5500 and 5700, not breaking 5500 convincingly on the downside and not able to cross 5700, and that is what I map the Nifty at over the next few weeks, I would say, probably the next 10 days or 15 days, and then we move ahead. But I don't see 5500 being broken convincingly and we go down to 5100 or so. Probably 5450 is possible, but there I would be a buyer with a positional view.
In fact, if you look at the intraday chart of Reliance Industries, you would see that the stock was giving a lot of support to the market till last hour of trade, but gave way, especially on some comments coming in from the oil ministry at the sideline of inauguration of Kane's gas field in Barmer, that in the next 14 to 15 days there could be some more progress as far as the gas pricing front is concerned. Reliance's appeal about hiking the KG-D6 gas pricing is still due, and we are getting reports that EGOM will be scheduled in the next 15 days to take up that particular issue with the immediate effect. Manishi, what is your call on Reliance with the oil minister saying they may look at gas price revision in the fortnight or so? And also news flow has been quite positive even for KN. They've already started gas sales from Rajasthan field.
You see, gas price hike would obviously be positive for all the incumbents, including Reliance. Though, we would possibly prefer to play ONGC on this, because ONGC would possibly be a more direct beneficiary out of this. In case of Reliance, the bigger variables are the refining margins, which continue to be still weak in entire Asia. We have seen Chinese demand for, plastics and related products going down after the Chinese New Year. So, I think, for Reliance, the current volatile phase may continue for some more time.
Sudeep, wanted to come to you with an outlook on the overall banking space, because the bank nifty is never eluded by the kind of volatility that we see. But do you think the NPA stress and worries are likely to remain more for some of the PSU banks, and you would place your bets with some of the private banking names, particularly blue chips?
You're absolutely right. That's been our strategy for quite some time. In this kind of economic condition where the growth has slowed down considerably from around 9% to about 5%, you cannot have a situation where the PSU bank asset quality will improve. Absolutely certain that asset quality, assets will be under pressure, and we will continue to have these NPA issues plaguing the performance of the PSU banks and a whole lot of not so well managed private sector banks. So you cannot really look at these banks even as a long-term bet right now. They are available at attractive valuation, but time to pick these up hasn't come. If you have to buy a bank, you should stick to large cap private sector banks like the ones you are alluding to. We like ICICI Bank. ICICI Bank coming below 1,000, I think it's definitely a good buy. Even at current levels, you can buy with about 20% upside in about 6 months' time. Axis Bank again is a good bank. Even HDFC Bank at dips is a good bank. But our view is that you should not stray out from the large cap private sector banks in this kind of economic scenario.
Even if you look at today's trading pattern, it's difficult to call it a trend, because even among the private sector banks, HDFC and Axis Banks of the day were doing much better. ICICI continued to remain under pressure. Sandeep, how would you trade a bank nifty in this light, or some of the large components of the bank nifty for that matter, also taking into account that we are just 2 days away from the expiry? Do you expect some short covering bout in the next 2 days, which one as a trader can ride?
Well, Ajay, definitely a short covering is possible, because we are in extreme oversold levels, and that is the risk one has to take if the basic trend is down. The main stocks are looking weak. If there is something negative on the political front, we may just crack down. So that risk is there on the downside. On the upside, you have a risk of short covering. I see at a current level of 11,100, 120 bank nifty, I would talk of a 300 points at least downside. But 100, 150 point upside short covering cannot be ruled out. So I would be comfortable selling the bank nifty on any bit of an up move to the tune of 100 to 120 points. Take a 100 point stop loss and play for a 400 point downside target. And mind you, this is not for this week. We have a truncated week, so there is a lot of choppiness that can be expected. Take a view of a couple of weeks and expect a level of 10,750 to 10,800 on the bank nifty.
Okay, that's the call coming in, and off by 0.6% by the day's close. Manishi, there's been so much news surrounding the FMCG sector as a whole, but specifically on Unilever, we understand that analysts are extremely worried that they're going to see a volume growth of less than 5% this quarter. That's going to be pretty abysmal. What would be your view on this stock at these levels?
After the recent correction, Lever's corrected almost about 15 to 20%, from around January onwards. we think that valuations, even though not cheap by any means, they're clearly more attractive than they used to be in the past. So I think that was our reason why we included levers both in the Indian model portfolio, and we also highlighted that as one of the relative outperformers in a relatively uncertain time.
Sudeep, how are you looking at the telecom space? Again, pretty mixed trends coming in. Idea was up, but Bharti continues to remain under pressure for almost a week now, despite some positive news coming in from Bharti that after a good round of fundraising, $1 billion, they're going ahead and raising another $300 million as bond issue in order to reduce their high cost debt. How do you see Bharti?
Well, Ajay, I think, we have been a little conservative and little cautious on the entire telecom space. There are a whole lot of things which are happening, and I think there is extreme uncertainty pertaining to this sector. The regulatory situation is really very confusing. I don't think anybody has a fix on what's going to happen or what's happening actually in this entire space as far as regulations are concerned. As far as the companies are concerned, particularly companies like Bharti, Arcom, there is a huge debt problem on the balance sheet. They need to do something, and they need to very quickly bring down the debt levels. Without that, I don't think these companies are getting into any comfortable situation. Bharti has an added problem of African operations not stabilizing as expected. So we are cautious. Of course, Bharti is a good company, and it's a very good buy from a long-term point of view. But one doesn't know whether there are still a lot of correction opportunity left in Bharti or not. As far as Arcom is concerned, I think at some point of time it's worth buying Arcom, but whether that point has come now or not, one is not sure. Idea looks good, but again, I think caution is advised, because when the market is correcting like the way it's correcting, it's no point getting into these kind of volatile stocks.
Sandeep, what would be your view on the way SR Oil panned out in today's session? Do you see an uptick in tomorrow's session as well, or is this just a flash in the pan?
Well, SR Oil did show a good move in the beginning of the session, but then the way it closed, I'm not very enthused, very honestly. From a higher level of around 82, it closed at 77, so it gave way. Though yes, it is not weak, I would say, but it can be a good trade for a limited upside to the tune of 80, 81. I don't have a view beyond that.
Okay, that's a call coming in. Well, Sudeep, wanted to get in your opinion on the overall media space, particularly with some of the MSOs, because what with the phase 2 digitization coming up, that would certainly be a breather for some of these companies. But there is also news that has been coming about that the TRAI is saying that most of the MSOs have violated the order of quality service guide, and legal action is going to come about. How should one approach this basket come tomorrow?
Well, I think it's a little unfortunate that these regulatory news flows are coming in at a time when we were all expecting that these companies will show great performance in the market. But one doesn't know what the kind of regulatory action is being talked about. And I won't think that there has been major violation as far as these companies are concerned. And looking at the second phase of digitization, which kicks off from 1st of April, we are bullish on these stocks, Dish TV, Hathway, and we will like to buy these stocks at dips with 1 year plus time horizon in mind.
Let's get you some stocks which you should keep on your radar. Yatin joins in from the research desk. Yatin, in your conversations with the institutional dealers and analysts, which are the stocks which are coming up for trade coming days?
Well, Ajay, two stocks, we need to watch out for, one from the trading perspective and one from the investment perspective. Talking about Adani Enterprises, and the stock has broken the crucial 200 rupee psychological mark, and dealers do believe that the stock has started trading below 200, which means that the short-term target on the stock could be 180 to 185. So this is one stock wherein dealers have been, betting on the bearish side. And also, there are a lot of debt concerns on Adani's books, and also promoters will look at doing off for sale going forward is what the market buzz is. So given the fact that the stock will remain under supply pressure, there could be some downside in the short term. Also talking about Anantraj Industries, and the company's management is quite confident of becoming debt-free going forward. They have a small debt on their books, but given the fact that their project pipeline has been strong, they are Delhi, mall ramp-up is going on smoothly, as well as the new launch of the Gurgaon township will improve the cash flow position going forward in FY14. So this is one stock from the real estate space wherein dealers are, looking to bet their money safely, especially after the recent correction. There is some value on the table is what dealers believe. So with a tight stop loss, Anantraj Industries is a buy, and CLSA also has a buy recommendation on this one with a target price of 113, which is almost, double the current market price. So 100% return in the short term is what dealers expect over the next 6 to 8 months.
Thanks very much, Yatin, for giving us some of the stocks to keep out on our radar. But Sudeep, wanted to get in your view. It's unfortunate, but now we're accustomed to this panic selling in the markets all of a sudden. So from an investment perspective, which are the stocks that you think investors would benefit from putting their money in?
Well, Aman, what we are looking at is safe sectors like FMCG and pharma for maybe next 6 months to 1 year. It's best to concentrate in these sectors. As far as pharma is concerned, we believe there is tremendous opportunity in value buying at current levels. One can look at companies like Ipca Laboratories. It's a great buy at current level. One can look at Glenmark Pharma. It's a great buy at current levels. On the other consumption side, we like Amara Raja Batteries. I think it's a great story at current level. We are looking at 20% plus upside in about 6 months' time. Performance has been much better than Exide, a competitor in the market.
Sandeep, at the current technical setup, almost at the 200-day moving average, what side of the market would you recommend to be played by traders, and what are the specific stocks you have on your radar to use, along the shorts?
Well, in the short term, which is a few days to a few weeks, definitely there is some more downside. So as a trader, I would advise playing for the downside. But then, since we are in an extreme oversold level, bounce backs can't be ruled out. So you should wait for a bounce back and then sell. I mean, any 40-50 point bounce back in the Nifty should be used to sell rather than when it opens gap down. Individually, I have a buy in GMR, trading buy in GMR, stop loss of 20, target of 2450. I have a sell in Hero MotoCorp, stop loss of 1640, target of 1575.
Auto Hero Honda is a sell as far as Sandeep Agle is concerned, mainly on the technical charts. But from fundamental perspective, Manishi, the auto space has not really done anything. Look at Hero, M&M, Bajaj Auto. People compare the two-wheeler stocks to consumption stocks now. There were sub-sectors within the auto space as well. What happens now? What do you do with auto stocks?
Auto is one space where one has to play the stocks very selectively. Like two-wheelers, for example, there is a clear stress that has built up in that sector. Inventories have expanded to about 6 weeks or so. And given the fact that competitors are now launching new models, they are expanding capacity, I think for the older incumbents, pressures are building up. So even though there would be relative outperformers and underperformers within the two-wheeler sector, for example, we prefer Bajaj Auto over Hero MotoCorp, we think the sector as a whole would be under pressure for some time. Four-wheelers possibly look slightly better, maybe only slightly, but still slightly better, because firstly, the extent of demand compression, which actually happened slightly earlier than in two-wheelers, is possibly showing some small sign of recovery right now. And at least, companies like Mahindra, for example, they haven't suffered that badly. Maruti and passenger cars have clearly suffered more than, let's say, utility vehicles. So, the point I'm trying to make here is that there is a scope for being very selective in the auto space. There are possibly one or two stocks that one can still make money on. These stocks have underperformed, no doubt. And I think that opens up some opportunities selectively.
Okay, that's the call coming in on the auto space. Let's take time out to thank our three guests for being with us. Sandeep, Sudeep, as well as Manishi. It's been great having you with us in this session of Markets Tomorrow.